I'm with Andrew Canter, the Chief Investment Officer at Future Growth, in your office again, Andrew. And there's some interesting things going on with ACSA. Now, most people know ACSA as the company that owns the airports, Airport Company of South Africa. But there are minority shareholders.
Well, yeah, most people know ACSA as the state-owned airports company. And funny enough, there are minorities. The minorities in ACSA own about just over 4% of the business and have for quite a long time, since the 1990s.
What's the history there?
So what happened in the 1990s? There was a big privatization drive across the range of government. You may recall. I mean, that was the era of telecom being privatized, for example. And at the time, they decided to commercialize and privatize ACSA. And the way they started doing that was they sold a 20% stake to the European company Aeroporti di Roma. And at the same time, they brought in empowerment schemes where they sold about 4.2% of the business to empowerment groups. And another small portion, I'm thinking it was another 1% or so, to a management incentive scheme. It might have been 1.5%. Anyway, a few years later, it seems government changed its strategy and its policy. This goes about 5 years later, about 2003, and they basically got the PIC to buy out Aeroporti di Roma at then a sort of a 10% return on their investment, 10% per annum return on their investment for the 5 years. But the minorities, the rest of the minorities were just stuck in there, and there was no discussion or dispensation made. And there it sat for quite a long time through the era. During this era, ACSA had been paying dividends because they were a profitable enterprise running old airports. But then there was the big investment drive, gearing up to 2010, the rebuild of all the airports, the building of the brand new airport in Durban, and the dividends stopped. CapEx went huge, and the introduction of a regulator and regulated tariffs. And the minorities were basically just forgotten about. We weren't invited to AGMs. We weren't sent any board packs. We weren't sent any AGM packs. It was like it went into a black hole.
How big was that investment drive, and were you asked to put more capital in?
No, it was all funded. It was all funded from the balance sheet or from the income statement. So there was never any call for additional equity capital. But nor were we ever asked whether we approved it as minorities. I mean, you're talking about a 4% stake, and what is that point? PIC owned 20%, government owned 70 plus 75%. We were a minority, and who cares? And they didn't ask, and we were shunted around. So following on that, you would think after you build all these brand new airports, well, now that's good. That's how you do infrastructure investments. You put a lot of capex up front, and then you get to collect a revenue stream for a long time on a reasonable commercial basis. But the tariffs that have come through from the regulator have been not globally competitive or not offering an appropriate return on equity. So at this point, we're looking at a situation where the government is run like a state-owned enterprise on a non-commercial basis, which is fine if you're Transnet or you're Eskom and you don't care about the return on equity because you're the government trying to facilitate development. Well, that's fine. I fully support that. But this is not a state-owned entity. This is a partially privately held entity, and we have no exit from this company. You can't transfer the shares without the minister's approval, and he ain't going to give us any approval. They refuse to talk to us about the shares for years. There's no engagement. We have no discussion about dividends. We can't contact or have any dialogue with the regulator to get tariffs up, nor would ACSA or the government support us if we did that. So we're kind of economic hostages in the business we have no say in.
How big is the stake? What is it worth?
Well, that's an interesting question. At NAV, it's worth probably about 500 million rand. On a fair commercial kind of global price for airports trading, it's worth something more than 2 billion rand.
Well, this is not insignificant.
It's not insignificant at all, and that's why eventually, after these years of gnashing of teeth and going back and forth, or not even going back and forth, just going forth, because they weren't responding very much, we decided we really need to push this matter and get the government to pay attention to the fact that we do exist. We are shareholders. We are entitled by law, which we'll discuss, to a commercial return, which we're simply not getting.
Many people looking at the way that the taxes on airports have been rising, and certainly what we see from our air tickets, would be surprised to hear that the return that's been demanded by government from ACSA is below the economic rate.
So there's several elements to ACSA's profits, and the regulator uses what's called a single till mechanism, where he combines the combination of the parking tariffs, the retail tariffs, and the aeronautical side tariffs all into one basket to get his return on equity. That's very controversial, by the way, because the aeronautical side is the part you should regulate to make sure the prices are fair and competitive. The rest of it is a shopping mall. Nobody should be regulating the profits on that. But anyway, they've decided it's a single till. That's how they're going to measure it. I can live with that. The issue you raise about each of us as individuals paying a higher tariff for landing fees and such. I've eyeballed global landing fees and passenger tariffs. South Africa does not look like, to me, it's out of line. I must say, when I look at airline tickets and they talk about fees and duties, a lot of that I think is fees stacked on by the airline, not by ACSA.
All right, so fast forward to where you are at the moment. Government isn't listening to you, so you're going to court.
So a couple of years ago, finally, the ACSA board kind of got our message after we'd been stroppy, and they generously made us an offer to buy us out at just over 10 Rand a share. Bearing in mind the NAV on the balance sheet of the business, which is brand new built airport, so we know the NAV is reasonably correct, was 26 Rand per share at the time. I'm speaking in rough numbers. Well, then they said, okay, yeah, you're right, it's too low. They came to 12 Rand a share, which is still a 60% discount to the now NAV of 27. So it's just offensive. And that's just NAV. Forget about the price to earnings ratio. When they sold the stake to the Maoris, it was 18 times earnings. On today's earnings, that would put you, I think, at 54 Rand a share. The most galling thing about this whole topic is that even as ACSA was buying into the Sao Paulo airport on a what is called an enterprise value to EBITDA, a valuation of 35 times EBITDA for their stake in Sao Paulo, they were bidding us at like 3 to 4 times EBITDA.
On what basis? Surely there must have been some discussion.
There was no discussion. That was their price, that 12 Rand a share, and that's why we're offended. We have a scatter plot of all the airport transactions that have occurred around the world since sort of 1985. And if you look at that scatter chart today, the average price to EBITDA or enterprise value to EBITDA is between 15 and 20 times. And here they bid us 3 times, 4 times. All right. In the meantime, the regulator is regulating tariffs that are below the return on debt capital, let alone a return on equity. And we are literally economic hostages. And the reason why they bid us so low, well, ask them, but it strikes me as they're bidding us that low because they think they can. That is the definition of being an economic hostage. That is oppression of minorities, and that is what we are suing for. Our suit, our legal action in the High Court is an oppression of minorities case under the Companies Act, saying they are taking advantage of us as minorities and not giving us our economic rights.
So what are you wanting to prove in the court? What exactly? Oppression of minorities, I understand philosophically, but what is the judge going to rule on?
Well, we have to prove this oppression case, which on the sheer numbers is self-evident, I think. But of course, it's court. So they're not economic people; they're legal people. What we hope that the court will instruct is they will find that indeed there has been an oppression case, that we have not been treated fairly, that we have no prospect of being treated fairly, and that the court will instruct ACSA and the Minister of Transport to appoint a third-party valuer who will use commercial global standards of valuations of airports and instruct the minister to make a proper bid for these shares.
So what would the difference be between the 12 Rand a share, if you work that out in the total amount of money in Future Growth's case, and say the 54 Rand plus that you would be hoping the court would rule?
Okay, so as I said, their last bid to us was call it 12 Rand a share. The NAV is just over 27 Rand a share. The 18 times earning is 58 Rand a share, and just an 11 times enterprise value, not the 18 or 15 times the world's trading at, but 11 times enterprise value gets you to 94 Rand a share. That would be a total value of 2 billion Rand of value for this 4% stake.
That's worth going to court on.
It is absolutely worth going to court, and it's worth fighting and getting attention for. The government seems to shunt it aside.
How long is this case likely to last?
Oh, high court cases. Let's assume we're going to be talking about this in a year's time. For a start, ACSA has to respond. We have to re-respond. You have to get a court date. There'll be continuances. It's going to take a while.
But it seems pretty obvious what's going on here. You're a small shareholder. You can get screwed over unless somebody makes a fuss of it.
Well, look, I guess I think government's policy when they get sued is to go underground, pull down the shutters, and go to court. And we welcome that at this point. This is as much about the principle as the money. We want the money. We think ultimately at the back end of this are investors. And we need to talk about who funded these empowerment schemes. People seem to think, oh, it's just some old grumpy empowerment guys. They never put 1 cent on the table and they never got rich, so tough. Well, the fact of the matter is that funding was in many cases done with pension money. In the old days of empowerment, you funded debt capital so that BE groups could get equity positions. This is still how it's done to some extent. The fact is when they defaulted on those loans, pension funds became the owners of those shares. That's what we are. Future Growth, through our funds, is owners of those shares. They are pension funds we're investing for. The government is actually taking money from pensioners now. The empowerment guys, sure, many of them got knocked out. They never took risk. I must say that at least one of the empowerment groups in here did put real cash money on the table to buy their shares. And they are also angry about this because they've had money locked up now for 20 years, earning no return in effect. And they're equally trapped. And they put real money on the table.
Andrew Canter is the Chief Investment Officer